There are things that dads like to talk about that will make someone tune out. Golf, work, his fantasy football roster, and more often than not, the stock market. But one of those things matter. Two, if you count work, but for today's lesson, the stock market. It's more than just a building in downtown New York. In fact, the stock market was around centuries before New York. It technically started in the year 1400 in modern-day Belgium. Local merchants would buy goods and hold them for a while, assuming their price would go up. Then, years later, they'd sell them for a profit. And in 1400, if you sold a bag of grain that you were saving at a 20% profit, that was a major flex. Well, over 700 years later, the same rules apply on the modern stock market. But now you can own more than just a company's products, you can own a piece of the company. Investing in stocks is a popular approach to having your money make money. Rooting for a company to succeed is a risky and proven way to be more financially diverse. The concept of investing can be overwhelming. How do you invest in something? Why do you invest? I'll keep it simple. But remember, investing is a risk, so move slow. Investing occurs when you buy assets, like a stock or a bond, with the expectation that they will be worth more money in the future. Traditionally, people invest in stocks and bonds for the long term. Maybe you've heard of people who bought stock in Apple and Amazon 25 years ago. They invested wisely, and now they have fancy cars and we don't. So let's discuss investment options. We know that the word investment can mean a lot of things. When it comes to finance, there are a few key investments that you should know about. Here are a few to get the conversation started: stocks, bonds, real estate, and funds. Let's start with stocks. Buying a share of stock is buying a small percentage of a company. Purchasing stocks are long-term investments where the success of the company determines the value of the stock you bought. But buying stock does not guarantee a profit, because some businesses fail. Bonds. A bond is essentially a loan that you give to a company or government in exchange for a higher return on the loan down the road. Bonds are more secure than stocks because you have guaranteed returns on your investment. But for them to pay off, you have to be patient. Some saving bonds issued by the Treasury can take up to 20 years to mature. That means it takes 20 years for the investment to be worth what you were promised. So, like we said, make sure you have the time and the patience. Real estate. The idea of buying a house or condo may be a long-term goal of yours, and it's a good one. Owning real estate remains one of the most profitable and time-tested investments you can make. Investing in a home or property can pay off if you do your research on the potential value of the land, neighborhood, and house. Doing so requires a lot of money up front, but after that, as long as you pay your mortgage on time, you can expect a nice return or profit. And finally, funds. An investment fund is a way of investing money with friends to reduce risk. Each member owns a percentage of your group's collective fund. And when one of you turns a profit, you all do. But profits are not promised. Investing always comes with a risk. For starters, market risks. The stock market moves in waves. Some days the waves go up, other days the waves go down, and no matter how awesome your investments are, if the market dips, so will they, and trust me, that can be stressful. Just look at any of your friends that have Bitcoin. Then you have business risks. Even if you believe in the companies you have invested in, they still have to meet their financial goals each year, and if they don't, there's a chance their stock price will fall. And when it comes to bonds, you have inflation risk. This occurs when inflation raises prices and lowers the value of the dollar, which lowers the return on the value of the money you receive when your bond fully matures. But make no mistake, some risks come with rewards. And investing in stocks and bonds rewards the people who do their research in advance, invest their extra money, and plan for long-term financial success. But how long is long-term? One way to measure an investment's value over time is with time value. Pretty clever name, huh? Time value is the principle that your dollar today is worth more than your dollar tomorrow. If a milkshake cost $2 5 years ago and now costs $4 today, your dollar 5 years ago was worth more. But one way to combat inflation is through investing. Prices will always rise, thus making your dollar less valuable over time. So having your money make you money is a popular approach for investors to succeed. There are many different ways for you to invest your money, and STEP wants to help you understand them and determine what works for you, because our generation's financial success is worth investing in. We just scratched the surface, but now you have a better understanding on how investing works and a few ways you can invest your money. And remember, when it comes to money, there is no one right approach, only the right approach for you. Thank you guys so much for watching. I'm Kelly Wakasa. Be sure to follow us on Instagram, TikTok, and Twitter at STEP, and subscribe to our YouTube channel so you can start spending your money your way. Cavemen used stones, stones became bricks, and bricks became Legos. When you think about it, blocks have really helped shape the world. And now there's a new block on the block. Introducing blockchain.